All eyes on 106k. Is Bitcoin about to explode? Bitcoin just dipped below 104k after a strong rally, but is it something to worry about? Actually, maybe not. There are signs that we are at a major turning point. Key players like miners and whales are acting differently. The macro backdrop is shifting. And while short-term volatility is rising, the bigger trend might be gearing up for its next movements. Hi everyone, I am Neil, and in this video, we are breaking down what is really going on beneath the surface. From global macro events and on-chain sentiment to heat maps, CVD flows, and what whales are preparing for next. We will break down what the macro backdrop is telling us, how whales and short-term traders are positioned, what the heat map shows for the next breakout zone, and whether this dip is just noise or a setup for a bigger move. Let's jump in. Let's start with the macro. As we saw yesterday, the US and China just reached a major agreement. A 90-day pause on mutual tariffs announced after high-level talks in Geneva. Markets closed mixed. Dow Jones, on the other hand, dropped at plus 0.64%, the Nasdaq jumped to 4.5%, and S&P up 0.72%. It turns out CPI data also dropped the same day. Core CPI came in on forecast, but as you can see, the rest missed expectations. Inflation is slowing, yes, but analysts were quick to point out. This data came before tariffs hit the real economy, so markets are cautious. This is why the uptrend was limited. Now, at this end, President Trump is currently touring the Middle East. On the first day, he signed a strategic partnership agreement with Saudi Arabia's Crown Prince, Mohammed bin Salman. The deal secured 600 billion USD in investment commitments, a clear sign that the US-Saudi alliance is back on track. After the deal was signed, the American president was right back on Twitter, or X as we are calling it now, taking shots at the Fed. He once again called for rate cuts, saying inflation is falling and targeting Fed Chair Jerome Powell. Classic Trump. Trade deal 1 minute, Fed roast the next. Also, and here's what the FedWatch tool is showing. Markets are now fully pricing in a pause for both June and July, with over 90% odds of no change next month. But what is more interesting is what happens after that. By September and October, the probabilities of a rate cut start to climb, and by December, we are seeing a real shift. Markets are giving about a 60-70% chance that rates will be lower than they are today. So yes, the rate pause is locked in, but the real story is that cut expectations are creeping in fast. We are seeing some pretty interesting shifts in 2025. After the big Bitcoin rally in 2024, mostly driven by ETF hype, ownership is clearly changing hands. Since the start of the year, businesses have added over 157,000 Bitcoin. Funds and ETFs, another 49,000 Bitcoin. Meanwhile, individual investors have dumped more than 247,000 Bitcoin. That's a massive handoff from retail to institutions. It's clear, companies and funds are taking the lead in these markets. And if this keeps up, we could see even more ETF inflows and stronger institutional demand moving forward. Let's look on chain, starting with miners. The average miner acquisition cost is sitting around $53.7k, far below current price. And, more importantly, miner profit margins, showed through the NP indicator, are now in positive territory, currently at 0.47. If we break above 0.5, that has historically led to sustained bull moves. What about miner surrender? It's reversed. After a tough period, miners are now back to accumulating, with on-chain data showing a clear 8% increase in holding behavior following the last difficulty drop. Still, we are not in full breakout mode just yet. Miner export volumes haven't reached full bull market levels either, meaning the cycle is warming up, but not overheated. Alright, let's break down what happened on the chart over the past 24 hours. Bitcoin started the session just under 102.5k, trading pretty quietly at first, nothing wild. But soon after, momentum started to build. Price climbed steadily, pushing through lighter liquidity zones around 103.5k to 103.9k. A clean move, no major resistance in sight. But then came a quick pullback. Bitcoin dropped down to around 102.7k. And if you look closely, you will notice there is a tight support band between 102.5k and 102.7k. That area held firm. Bitcoin used that support like a launchpad, bounced hard, and pushed right through a zone stacked with short liquidations, all the way up to 105k. But that is where the momentum stalled. The price got rejected at 105k, then started a slow drift downward. Nothing sharp, just a steady decline, eventually stabilizing around 103.8k, where we are consolidating right now. And here is the setup. Right now, Bitcoin's trading sideways, caught between two major pressure zones. Above us, a thick short liquidation cluster between 105.5k and 106.2k. If Bitcoin breaks back into that zone with volume, we could see a fast short squeeze that sends price toward 107k, 107.5k, possibly even higher if momentum builds. And below us, longs are exposed from 103k down to 100.4k, with a strong support shelf still holding at 102.6k. If that floor breaks, we could see a flush down to the 101.2k, 100.5k zone, where the next liquidation band sits. And if things get heavier, 99k becomes a real possibility. Bitcoin's hovering right in the middle of the pressure cooker, shorts stacked above and longs load below. Price is coiling, and that tells us one thing: the next move will likely be fast, aggressive, and liquidation driven, not slow and gradual. If bulls can punch through 106k, we are looking at a squeeze that could rip into the 107k, 108k range. But if 102.6k fails, brace for a possible drop toward 100.5k, maybe even 99k. So stay sharp, watch the bands, and don't chase. The next breakout could hit fast. Now, let us take a look at the CVD indicator and see what the whales are doing. First, you can see there is a sell wall forming above 105k, but it is starting to weaken, meaning some of that resistance is getting absorbed, and sellers may be backing off. Maybe. Now, onto the whale activity. Mega whales placing 1 million to 10 million orders, brown line, are still buying steadily. These guys tend to act early, and right now they are holding their ground. Mid-size whales in the 10k to 100k range, green line, are also showing buying interests, joining in on the upward flow. Meanwhile, the large whales, the 100k to 1 million group, the purple line, are showing mixed behavior. There is some profit taking happening, even as others in this group are still participating in the rally. As for smaller players, the red line tracking 1k to 10k orders is mostly flats, showing little conviction either way. And the orange line, representing retail-sized order like $100 to 1k, is dropping sharply. These traders are clearly selling or just staying out of the way. All orders, the blue line, the market total. The blue line is trending sharply upward, but here's the key. It's being pulled up almost entirely by the whale cohorts. So, while price is consolidating just under 105k, whales are quietly stacking. They are building positions ahead of the next breakouts. What I mean is, the overall CVD is still rising, but the move is being driven almost entirely by whales. Big money is quietly stacking below resistance, and retail is pulling back. So, where do we go from here? Macro-wise, watch for the CPI print this week. If inflation comes in soft, it will confirm the Fed pause and likely full risk on across crypto. Rate cut expectations are climbing and institutional sentiment is growing stronger. You remember what we talked about in yesterday's video? Coinbase was just added to the S&P 500, the first crypto-native company to make the list. And, in a notable shift, SEC Chair Atkins appeared to be stepping back from the enforcement-first approach, signaling a softer tone toward the industry. Between ETF inflows, spot exposure, and regulatory progress, the backdrop is looking increasingly supportive. Now, let us talk technicals. Watch 106k for breakouts, short squeeze potential above that. 102.6k is holding as your primary support. If bulls defend this range, structure stays bullish, plain and simple. But below 101.5k, liquidation pressure could trigger a drop to 99k before stabilizing. So, even though the chart looks choppy, this setup still looks like a classic shakeout before continuation, not a breakdown. So, here's where we stand. We've got a major trade deal on the table, a Fed that is leaning dovish, miners holding their ground, whales quietly stacking, and a CBD that is still rising. Yes, Bitcoin dipped, but under the surface, the data is clear. This was a shakeout, not a breakdown. The trend is intact, and the next move could be big. Let me know what you think in the comments. Was this a healthy reset, or are we setting up for more downside? If this helped you stay ahead of the noise, make sure to like, subscribe, and turn on notifications. And as always, stay sharp, stay informed, and I will see you in the next one. Bye bye.